Welcome back to Cheddar. I'm Nora Ali. Well, Disney earnings have plummeted more than 90% as coronavirus wipes out $1 billion in theme park sales. Joining me now to break down the just out earnings report from Disney is Hatem Dhiab, managing partner at Gerber Kawasaki. Hatem, great to have you with us here today. Obviously, the earnings numbers just came out this time last year. Disney's parks, experiences, and consumer products, that division represented over 40% of Disney's total revenue. We know it's taken a major hit due to the shutdowns of their parks. Just how much of an impact, if you had to kind of contextualize, has the coronavirus crisis had on this company?
I mean, I don't think anybody was surprised about how bad this coronavirus has been on Disney. They're coming out from one of the strongest year, and boom, you got this virus. They have to close the parks. Nobody's going to the theaters. I think it was just a massive, massive shock for them, and you've seen it in the earnings today. Q2 is going to be even worse, I think. But I think they've done some things to help probably come out of it through their direct to consumer area and their streaming services.
Yeah, we'll get back to the streaming service in a second, but obviously we're seeing a loss of revenue in their studio entertainment division due to
Right.
the closure of theaters, having to delay so many of their blockbuster films. One delay is kind of a domino effect into others, especially when it comes to Marvel, for example. What are you going to look for on the earnings call, essentially, to give you confidence that Disney can come out of this for the better, given all of the delays that will kind of continue into the next couple of years in terms of their entertainment studio?
So what the pandemic has done is really kind of pushed what the inevitable was, which is the theater business was already dying. Now Disney was owned basically 60% of the box office. With the coronavirus, nobody's going to the theaters. So what's going to happen is they have to readjust and they have to start releasing their movies into direct to consumer. So thankfully they have that avenue to them. We've seen Trolls come out for Comcast this week and did $100 million. So there is definitely some opportunities there that thankfully Disney will have too. With the parks, I think eventually Disney will open again. And if you were to tell someone or people in 3 or 6 months that you could go to a park with 50% occupancy, and then you have to wear masks and do some social distancing, I think people will go to parks. So eventually, I think that's going to happen. So what we're looking for is we're looking to see what kind of measures Disney and the leadership is putting together to make sure that when we can get back to the parks and we can get back safely, basically.
Well, to that point, if visits to Disney parks involve masks and temperature checks, you can imagine the experience is not going to be as joyous in some people's minds as it used to be. To that point, their parks experiences and products revenues for the quarter that decreased 10%. Also highlighting their cruise line businesses, the challenges there. It feels like sentiment might be changing overall, even once the height of this pandemic is over. Do you think Disney is going to have to maybe invest more in other lines of business, as you mentioned, that direct to consumer, the Disney Plus business, or invest more in other things that are not so reliant on in person visits as the parks are and cruise lines are, for example?
I mean, luck or just planning. I'm so glad they have a direct to consumer division, because if that thing wasn't around now when we have this pandemic, Disney will be in real trouble. But they have Disney Plus, they have ESPN Plus, they have Hulu is doing well. So now they spent a lot of money, a lot of time to get here to have this streaming service. And frankly, this is the only thing that they have going forward that they can really grow quite a bit. You can, I think they said they have about 50 million subs already. I can see them having 100 million subs, even more. I think the bundle is very, it's going to be very, very successful. It's global. Europe is doing really well. I think it's launched in India. So they have this ability to distribute now all of their amazing properties on a global scale. And that's really the exciting part of Disney. And this is why, from a stock ownership standpoint, it's easy to sell them for all the bad things that we talked about. But if you think about growth and if you think about the potential of this direct-to-consumer division, I think there's opportunities there to make some really good money in Disney over the next 2 to 3 years. And I think they
Yeah.
can execute. So
And I think the chairman, Bob Iger, would actually agree with you on that plan for execution, saying just moments ago on the earnings call, as someone who has been around for a while and led this company through some really hard days over the last 15 years, I have absolute confidence in our ability to get through this challenging period and get through it successfully. Talking about the resiliency of Walt Disney Company in the last 115 years. Obviously, now that is the job of Bob Chapek taking over as CEO for Bob Iger a couple of months ago. Do you think that change in leadership, after having seen the track record of Bob Iger, is that a good thing during these challenging times where we might see a big pivot in Disney's business? Not necessarily a pivot, but a change as to how they actually operate. Is that a good or a bad thing for the company?
I'm not sure it was a bad thing if Iger was not around anymore, but he's still around. I think listen. Iger is probably one of the most successful CEOs in Hollywood. 15 years, some of the most instrumental purchases and conversion that he's done in any company really. And he just wants to move on, and the contract and the coronavirus hit. So he said, "Hey, I'm going to stay around." Bob Chapek was the guy running the park, so he knows parks. He knows how to bring them back into profitability. He knows how to make it in a safe way. And then Bob Iger will always be there. So I think investors are really happy that he's there. He's got that steady hand. He's someone that we can trust, and we've seen execute over many years.
Yeah, and the earnings report also highlighting some of the successes of Disney Plus, growth in distribution results due to sales of content to Disney Plus by Lion King, Toy Story 4, Frozen 2, Aladdin, etc. Obviously, one big benefit to Disney is people staying home and getting this opportunity to subscribe to a streaming service when they might not have before. Do you think Disney is going to be able to continue the momentum of new Disney Plus subscribers, having hit that 50 million subscriber mark so recently, or is there still going to be headwinds from the whole sea of other streaming platforms that are out there and still yet to be launched?
Um, Disney is probably the company that has the most um, talent, the most the movies, sports, like everything that you really would want. Disney has and has access to, and has done it really well. So yeah, you launching the service during the pandemic was absolutely a huge luck, and it worked out really well and gave them nice momentum. But I think they are able to sustain that growth just simply because they have such a diverse tool or toolbox of different kinds of content that they can really come up with. I know they just released the Star Wars yesterday, but they have the Mandalorian, which is really people like it, and they have all the sports that's coming in. So I think they have a slew of things that people will really love.
Yes, I am one of those people who loves The Mandalorian, but I want to end with talking about media networks. You brought up ESPN, for example. How confident are you in advertising revenue in that space overall for Disney to be able to draw ad dollars away from its competitors and maybe trying to decide who has kind of that return on investment for these brands?
Well, they definitely had some issues with not having sports. I mean, normally not right now they'll be having the NBA, college sports coming up, and so forth. But um, ultimately, I think we'll get back to sports. I think everyone out there is missing sports. They're missing. We're missing to get back to normal, and Disney will be right there. They will make sure that we have access to that. The fact that it's going to be on Disney Plus, we're going to be able to see different kind of sports from different places, and so forth. So I think that they'll sustain that. ABC has done really well. I think it's one of the top networks right now. Again, staying at home really helped their viewership. So ultimately, we'll see that sports division and ESPN Plus do really well. I know in my office, in my friend group, everyone loves it, everyone has it, and as sports come back, I think that's the first thing that people will see as coming back to normal. So everyone will be excited.
All right, Hatem, thank you so much for your time and for breaking that all down with me. That's Hatem Dhiab, managing partner at Gerber Kawasaki.